like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
The great sci-fi art of the mid-20th century teased a vision of the future with one distinct element in common: a life for humans in outer space. Whether vacationing on an exotic new planet or commuting to the moon for business, space travel seemed like it was just around the corner. Yet here we are, a half-century later, and only about 500 human beings have ever left the bounds of Earth's atmosphere. But thanks to a set of ambitious private companies betting on the promise of space tourism, that long-awaited future could be here sooner than we think. For most of the history of spaceflight, governments have been the prime force behind nearly every aspect, from planning to funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But, government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience, and you can float and take some photos. And then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile-high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken a flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about 62 miles, you only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space, because this is showing them that, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China. Well, that's like really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space like really affordable and accessible for everybody, so that you can have fishing buddies go into space someday. But the first is special, and so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now they've been testing. And you take it up and it's rather small, and then you inflate it, and it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easier to carry instead of this giant tin can with all of that. The inflatables are lighter. You just blow them up, and they get a nice big size for about less than half the weight probably.
But even as space missions become accessible to civilians,
the risks of going into space are incredibly high, and you could die 1,000 ways that we can think of, and 1,000 other ways that we can't think of.
This is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts. But I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you, spacecraft operator, make sure that you inform your space tourists of all of the hazards that you know of. I imagine a very long waiver, all the ways you can die in space. And you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch. If it can even be done, it's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all the times hotels on Earth are sued, right? So slip and falls. You step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. Because of the vagaries of international law, if something happens in space, well, boy, you can sue the state that launched your spacecraft, you can sue the company that brought you there, you can sue the hotel, you can sue the individual, you can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin, that's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space. When it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan, and his crew, Heron,
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Swirstra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah. Good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA.
Yep.
And then just roll out when you want.
It's my daily driver. Handles great. And then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over.
That's cool.
We just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything? When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. and they've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. I'd be like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
As a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and
don't go in the valley.
yeah, no problem. We just wanted to get through.
It was a beautiful choice. Glad we got out of the smoke.
Whoa, okay.
But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky,
Look at it.
strip malls of the Central Valley.
We have made it sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California, very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think, like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines.
And have you just sold them in the Central Valley, or like throughout the U.S., or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019?
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap.
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine, we call it Orchard Gus. mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello?
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LQ.
Can I take her out for a spin?
Please.
LQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LEQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LEQ?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the U.S.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would
and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while, and I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, Matt Miller here with my old buddy Paul Sweeney. Carol Masser is off today, so we'll try and do a decent job taking you through the next 3 hours. There's so much going on, Paul, with bankruptcies that happened over the weekend as well as M&A.
Yeah, so M&A, on the M&A front, we had a pretty nice deal in the gold business. So we'll take a look at that, some consolidation there. We got a big player, so that was a $20 billion deal. And then there's an energy deal. You know, it's another $19 billion. So it seems like some of the CEOs woke up this morning and say, let's get some deals done.
Yeah, some scale. So they're getting bigger to deal with higher rates is what it seems like to me. We also saw 7 bankruptcies over the weekend. So what that means to me is maybe Fed policy is finally working through the system. I think Peter Cheer from Academy Securities this morning say that he thinks the rate hikes from November are finally hitting the economy now.
Yeah, if you have to refinance anything right now, that's a sticker shock. If you need new capital right now, that's sticker shock as well. And you may not even get it, I mean, quite frankly, because there's a concern that credit conditions are tightening, the supply, the availability of credit is tightening. And then if you do get your banker on the phone, he's going to quote you a rate that's going to probably set you back a little bit relative to what you've been paying.
Could be a real concern. Well, we're going to talk about all of those issues. Plus, we got a big take story today about an FDA approval process that was introduced in the early 90s, a little-known approval process that fast-tracks drugs through, and a number of them have been on sale for 7-8 years now, and they still haven't proved effective.
I know, and this is an issue. I mean, we really loved the accelerated approval from the FDA during the COVID and getting those vaccines. And, you know, you like it when the FDA can just be aggressive and really be a little bit market sensitive. But the risk is kind of what we're seeing here. So there's a reason they have their process.
All right, so all of that over the next 3 hours. And we're going to talk to you about markets, which have been increasing just a bit, up about 0.2% right now. Let's check in with our TV team.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go in the trading day. Romaine Bostic here with Scarlett Fu, joined right now by our colleagues Matt Miller and Paul Sweeney, filling in today for Carol Masser. Welcome to our audiences across Bloomberg Television, Radio, Originals, and those folks streaming on YouTube. Welcome to the party, Paul Sweeney. I don't think he's listening to us. Matt, how are you doing here? We got a big day here in the markets. I I mean, we're green across the screen here, but I'm not sure the conviction there is going in one way or the other.
Yeah, no, I don't think so. And I think the big concern right now is, could this debt ceiling debate end differently than the last 70 debt ceiling debates, right? Could we actually default here? It seems like a bigger concern now than any time, at least in my memory, since 2011. So I guess that's the major thing. I notice a lot going on in these markets that just doesn't seem to be playing out in the price action, Romaine.
Yeah, I mean, I'm thinking about it. I look at this market here, and obviously it seems to be a tale of the tape over the last several months. Not a lot of movement, not a lot of volatility. I'm going to quote the VIX here for our good friend Tom Keene. It's just hankering right around 17, so not a lot of volatility there. And then you look today in the volume, 10 to 15% below averages. So again, seems like a quiet Monday unless you're one of those M&A stocks.
Yeah, that's right. Let's get a quick check on the broader markets. Now, the good news is we are pretty much green across the board here for all of the major indices. The Dow actually poking into the green as we speak here. The S&P only up about 0.2% here on the day. The NASDAQ up about 0.5%. But the big outperformer here today belongs to the Russell 2000. That's largely thanks to some decent rallies that we're seeing in the biotech space as well as with regional banks.
And you mentioned banks. It's certainly one reason why financials are one of the better performing groups in the S&P 500 today. You've got two groups gaining more than half of 1%, starting with materials, led by Albemarle on an upgrade from Baird. And then the financials, all 15 banks in the S&P 500, like Zions, Comerica, KeyCorp, they're all higher. Technology is getting a lift from the chip-related companies, and energy has really lost some momentum after leading the way earlier as WTI climbs above $71 a barrel. On the downside, utilities giving up 1.2%, and REITs also under pressure by half of 1%.
Yeah, some of the bright spots out there. Take an eye on Western Digital. Shares up about 11% here on the day. And this is largely on the back of some reporting out of Reuters about a potential acquisition or merger, I should say, with a big Japanese firm that had been reported earlier here, but the idea that that might actually be moving closer to fruition. Meanwhile, the flip side of that is keep an eye on Intuit as well as H&R Block. The tax preparers down here on the idea, once again, that the U.S. government actually might step in and provide some sort of free or at least heavily subsidized tax preparation services. Of course, this is an idea that's been bandied about for years, if not decades. It'd be interesting to see if that comes true and how they will react. Sarepta Therapeutics having a great day here, up about 30% here on the back of some encouraging data and the approval, or potential approval, I should say here, from the FDA for its gene therapy treatment, recommended by an FDA panel. The full FDA, though, still has to approve. And Meta Platforms out in front, at least as far as the big cap tech names, up about 2% here on the day. But I do want to go focus on, I think, on what Matt has been saying here. And the idea is that there is a big focus right now on that debt ceiling, and more importantly, on the potential impact that could have should they not reach an agreement. We talk about where folks are camping out, the flight to haven assets, and that includes gold. The latest MLive Pulse survey actually surveyed a lot of folks as to where they would gravitate to should this debt ceiling debate come closer to the wire, and the majority of them said it would be gold.
Yeah, you know, the other thing is, if we see a default, you know, how hard does that hit the economy? When payments stop flowing, companies go bankrupt, and we already had a huge spate of bankruptcies over the weekend, right? 7 large companies filing for Chapter 11 protection from their creditors. That's the largest number that we've seen in any 2-day period since 2008. So it's a real concern, and if you get a default, even if it's only for a couple of hours or a couple of days, it could have reverberations in the private sector.
Yeah, well, credit is the lifeblood of the economy, and we see that day in and day out. Speaking of credit, a lot of companies are also selling bonds this week. By one count, $30 billion in investment-grade issuance expected this week, in part because companies are trying to get ahead of any kind of debt ceiling standoff and disruption in early June. A lot of the stuff that's supposed to happen in late May, early June, being pushed up to right now.
And, you know, I've been keeping an eye on those short-term treasuries. You're talking about 4-week bills, 8-week bills. I mean, we were something like 5.7% here on a 4-week bill, which is just astonishing, given that, 2 or 3 weeks ago, we were less than 3%.
Yeah, absolutely. I mean, a lot of folks are parking their money in some of the short-term paper, and why not? It's some of the best rates we've seen in a while. But, you know, Matt was talking about those bankruptcies, but on the flip side, got a couple big M&A trades, you know, to wake up to on a Monday morning, and then one in the metals and mining space and the other one in energy. You know, when you see M&A trades, that usually means the C-suite and the board are pretty confident about their future. So a lot of cross currents out there.
Yeah, I thought, I mean, not to throw water on it, but I don't know if you're referring to the One Oak deal, but I think it's interesting that most of the deals we've seen this year have largely been either in the energy space or in the healthcare space. And you really haven't seen a whole lot of deals, at least major deals outside of that space.
Yep.
So I wonder what that tells us too about sentiment.
Yeah, and speaking of getting a handle on the current sentiment right now, if you're watching Fed speakers, you're going to be watching a lot this week, right? We have so many lined up. If you type FedGo on your Bloomberg terminal and click on events, you can see Cook is going to be speaking, Mester after that, then Barr, Williams, then Goolsby, then Logan, then Bostic and Goolsby, the two of them together. Then Jefferson's going to give a speech. Then Barr testifies before the Senate Banking Committee. Logan again, Williams, then Bowman, then Chair Powell to finish out the week before we kick off.
Enough is enough.
Yeah,
no?
there's a lot, right?
Well, here's my question though: is do you think we're going to get any real variation or
Not
texture
at
in what
all.
they're saying between them? I mean, we heard from Bostic this morning. Michael McKee had the interview with him, and it was kind of the same song, right? That the fight against inflation isn't over. And I think the key quote for me was that right now the weighting in terms of their decision making is still towards hiking rather than cutting.
Yeah, and I mean, they're all speaking the same language. They're all singing from the same hymn book. I think the one part that I'm still bewildered by is what part of no rate cut does the market not understand? Because they keep saying that over and over again. Nevertheless, the pricing shows that investors are betting on something happening by the end of this year.
Yeah, read my lips. No new rate cuts. That does it for now. We'll be back together again on live TV and radio and YouTube at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close. And a reminder that Bloomberg Business Week is now on Bloomberg Originals as well.
Nice, I'll take that.
But you need
It's a gold
scale.
deal.
You need scale to pull it out of the ground profitably is what I'm kind of getting after this weekend's deal.
Yeah, so you saw this big deal. Newmont seals its $19 billion deal for Newcrest takeover. It's a big, big deal, $19 billion. Let's break it down with some folks who kind of really follow this stuff closely. Grant Spohr, metals, mining, and commodities analyst for Bloomberg Intelligence. He joins us on the phone from London. We appreciate him staying up a little bit late. And Leanna Baker, U.S. Deals team managing editor for Bloomberg News. She joins us live here in our Bloomberg Interactive Broker studio. And again, a gold star for Leanna for coming on, particularly on a Monday.
If you're the boss, I think the boss is more likely to come in.
You think so?
But
Well, that's what.
Let's check on a Friday. Let's check her out on a Friday.
Well, check me out on Friday. So, it's getting a little dicey here. Grant, let's start with you. You stayed up late for us here. From a strategic perspective here, why did this deal happen?
Hi, good evening, everybody, and thanks for having me. So I think it's twofold certainly from a Newmont perspective. One is you talked about scale. Not so much scale. I don't think Newmont's already the biggest gold miner in the world. So one arguably could ask, does it need to get any bigger? They would say yes, and part of that is the interest in the gold mining space. They want to move it away from a niche sector. So the bigger you are, the more you can compete with the larger cap oil companies or other basic resources companies. So bolting on, maybe say bolt on is a bit demeaning, but to add Newcrest to the mix is certainly gives you that scale. The second thing is when you are that big, it's difficult to grow. So Newcrest gives them a whole lot of new optionality of assets to grow their output. So I think that's the second point. And in a deal like this, what you can always do is then, which they talked about on the conference call today, is rationalize your asset portfolio. So in essence, cherry pick the best assets and sell off those ones that perhaps you feel as the management team don't quite fit or not quite tier one assets, as the mining companies would call them. So there's I would say three reasons.
Well, you know what? Before we get to any headwinds they may face, let me ask Leanna about the state of M&A right now, because I saw this deal coming through yesterday, and then I saw the One Oak deal, and now we're all of a sudden at $40 billion over the weekend. What does it look like here? Because Paul and I report, every week about investment bankers, poor investment bankers.
Yeah.
Difficult to earn a bonus this year, apparently, because the M&A has just gone so slowly.
It's definitely good news to see a merger Monday with these huge deals. You mentioned $40 billion in volume, but it's still very anemic. These mega deals are few and far between. When I started Bloomberg 4 years ago, when we were in an M&A boom, there was a deal like this, every day. So I think the regulatory landscape globally has made it really hard for some of these larger deals to get done, among other factors. And investment bankers, well, we shouldn't feel too bad for them about their bonuses. We have seen layoffs, and we just aren't seeing those big ticket deals that we were seeing maybe a few years ago or even last year.
So what are we seeing, Leanna, right now? I type in MAGO on my terminal, and I'm looking at $1.3 trillion worth of deals. That includes stuff that's pending, which is the bulk of it, right? More than $600 billion, and completed deals, which is more than $300 billion. What is that compared to last year? I mean, that seems like a lot of money to us.
It sounds like a lot, in the trillions, but in 2021, when we hit a boom times, it was $5 trillion in M&A. That was a huge number, although that's for a full year, but we're coming up on half.
Year, about a half now.
So we're at just a fraction of what we were seeing in 2021.
It's all hybrid work, Mac. The bankers just aren't making the phone calls. That's what I'm saying. You got to get them back in the office.
You think this is because they're working from home?
Yeah, exactly. They're on the beach. Hey, Grant, we kind of danced around this, but I know these companies are on different sides of the globe here, but talk to us about any regulatory hurdles these guys got to go through.
So for this deal, I must say I'm not foreseeing too many regulatory hurdles. The main operations for Newcrest are in Australia and Papua New Guinea. Newmont already has operations in Australia, so they're a well-known entity in the country and have operated there for a long time. So there shouldn't be any issues for them in Australia. Papua New Guinea as well. They've previously operated a mine in Papua New Guinea, and again, the regulatory hurdles shouldn't be that onerous. So I don't think I don't foresee any problems from the regulatory side.
Grant, how much does it cost for them to pull 1 troy ounce of gold out of the ground? Right now, we're looking at a $2,000 price tag, pretty much 2015. How much money are they making?
Well, okay, so it depends how you want to look at it. But the gold industry talks about all-in sustaining cost. So that's your operating cost plus a sustaining capital amount, which, the fact that you can utilize that over 2 years still makes it an operating cost by any stretch. So, some of these mines are as low as around, $800 to $850 an ounce. Wow. The others are slightly higher, at around sort of $1,300. But if you, on average, across
still fat margins.
Yeah.
Oh, but yeah, no. Cash margins are certainly very, very healthy and decent. So, across the group, probably around $1,100, $1,150 an ounce from an all-in sustaining cost perspective.
Yeah, this gold business is a good business. 40% EBITDA margins. I mean, they even had some free cash flow. Go figure that. Leanna, we heard from all the investment banks when they reported their earnings a few weeks ago, and they all acknowledged that, the deal flow's not there, but their pipeline looks good. That was air quotes for those on radio. The pipeline looks good. What gets a deal from the pipeline to a live stage? Do they just need lower financing costs, interest rates to come down? Do they need maybe more confidence in the economy, maybe, or geopolitics?
Or maybe they need actual pipeline deals, like we saw there was an energy
yes.
deal
I see what
today.
you did there.
Yeah.
1-0.
But I would say CEO confidence is the big thing, and that deals beget deals. So if you see CEOs nervous and they're looking at their rivals and they're seeing that no one's transacting, then that's bad for the space, and we're not going to see a lot of deals. So you kind of need to see some mega deals to have more confidence out there. Another reason why it's been tough on the banks is that IPOs are dead. Yep. So even though M&A has been okay, we've seen very few IPOs, although there was one 2 weeks ago.
Came out.
So that raised $3.5 billion, but that was the largest IPO since 2021. So it's really, that's an even more dead space than, let's say,
That's
M&A.
interesting. I was going to guess, higher rates are a headwind to more deals getting done. And in terms of visibility, right, I feel like we don't have much visibility right now, although that's probably the case almost all the time. And then there's a huge, antitrust sentiment, not only in the U.S., but across the Western world. Does that hold deals back? Or because right now, of course, we're watching Microsoft Activision very closely.
That's a fascinating one. And I do think it ties back to CEO confidence, because if you're not confident that your deal is going to pass regulatory muster and it's going to be tied up for 24 months, you're not going to want to do it. And we are seeing deals just in purgatory. Intel Semiconductor, they bought something called Tower Semiconductor. It's being held up in China. So it's not just even in the EU or the UK. It's just globally. It's really tough to get things in front of regulators.
Hey, Grant, you cover the global metals and mining business, and that's what that business is. It is global. They'll go anywhere to dig something out of the ground. Where's the hot part of your coverage right now? What are most people asking you when they ring you on the phone?
Well, certainly, for me, it's the battery metals. Gold it always has an interest, but it sort of waxes and wanes to a certain extent. But over the last couple of years, it's been the battery metals, and in particular copper. So that's a very closely followed metal, and I think a lot of investors that perhaps aren't in the minutiae of the space are looking at copper as just more from a thematic investment perspective. So decarbonization, electrification, you certainly need a lot more copper than you use today, and that is sort of whetting people's appetite for the metal and companies that produce that.
Hey, Grant, we only got about 30 seconds left, but let me ask you a random question. What's the dirtiest junk to pull out of the earth?
Yeah.
What's the worst for climate change in terms of mining?
Well, it's not so much the mining, but it's the processing that you have to do afterwards that really gets dirty. And some of the rare earths, are particularly difficult and challenging to upgrade and to process. And then we just need to go to something like aluminum or aluminium, as I would call it. It's very, very energy intensive. It puts a lot of CO2, especially if you use coal-fired power. So but it is more, I must say, on the processing side.
Got it. Grant, thanks so much for staying up late. Really appreciate talking to you. Grant Spohr there, Bloomberg Intelligence, metals, mining, and commodities analyst. Also, Leanna Baker, great to get you in the studio, the managing editor for the U.S. Deals.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here on Bloomberg, and this Bloomberg Business Flash is brought to you by BNY Mellon Insight, June 6th through the 8th in Orlando. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Stocks higher across the board right now. We've just got about 38 minutes to go until that closing bell clangs on Wall Street, with the S&P up 11 right now at 4135, a gain of about 0.3%. The Dow's up 32, higher by 0.1%. NASDAQ up 75, that is a gain of 0.6%. 10-year yield at 3.49%, with the 2-year 3.99%. Spot gold at $20.15 the ounce, up just about $5, up 0.3%. And West Texas Intermediate crude oil up 1.4% now, $71.02 a barrel. Bottom line here, we've got investors digesting debt ceiling negotiations, economic data, along with Fed speak. Gargi Chaudhary is head of iShares investment strategy at BlackRock Financial Management.
So the pivot that the market has been expecting and has expected in the past is this idea that we get rates to that very restrictive level, which is where we are now, call it 5 and 8%, and then pivot to cutting rates. And we've seen that price action happen over and over again. And our view here is that a pause is exactly that.
Air travel in the U.S. over the Memorial Day holiday weekend is forecast to rise to the highest since 2005, driving hopes that strong fuel consumption will counter a bleak economic outlook. Today, airlines flying higher. We've got UAL up 0.4%, American up 1.5%, Delta up 1.4%, Southwest also up 1.4%, JetBlue up 2.5%, and that is a Bloomberg Business Flash.
All right, Charlie, thanks very much. Charlie Pellet there with your Bloomberg Business Flash. Matt Miller here in the studio with Paul Sweeney. Carol Masser is off today, and of course I'm covering for Tim this summer, but we're both glad to be here.
Yes, absolutely.
And there's a lot to talk about today. One of the stories that really struck me was our big take on the FDA's drug approval shortcut. That not only does it get drugs to market faster, which I guess is a good thing in a lot of cases, but some of these drugs then stay on the market, selling, billions of dollars worth of pills or shots or whatever the treatment requires, and they don't come back with tests proving that they're actually effective, which I don't understand how that works. Someone who does is Bob Langrath. He covers healthcare for us here at Bloomberg News. He's on the phone. Bob, thanks so much for joining us. The story was pretty shocking to me. The first drug, Exondys 51, that you lead with, it's sold $2.5 billion worth of whatever it is, and they haven't come up with any tests to prove that it works. Is that the case?
Yeah, it's a really interesting scenario that's happening out there right now. There's this thing called accelerated approval, which was intended to get drugs for really life-threatening ailments onto the market a little faster if they look promising, while the drug maker was still conducting definitive trials to prove that they're truly effective. And what's happened is that this accelerated approval process has really expanded a lot in recent years, and now as many as 20% of all drugs get to the market through this accelerated approval process. And what's happened sometimes is once a drug maker gets something on the market, then the trials to prove whether it works or not get delayed. So the drug's on the market for a long time without having any certainty about whether the drug is effective in slowing the disease. And so Sarepta has one of the early, very controversial accelerated approval drugs called Exondys, which was approved in 2016 based on trials of just a few people. But what they hadn't shown at the time was that it actually slowed the muscular dystrophy process more than a placebo. And they've gotten that and two other drugs approved through this accelerated approval process. And, they've made lots of revenue, more than $2.5 billion in revenue through these three drugs combined since then. And so the whole controversy over accelerated approval is not so much, that it exists. It's that, Are companies, promptly finishing the trials once they're on the market with this accelerated shortcut to prove that they work, that they actually slow the disease or help improve symptoms? And in the case of Exondys, it was approved 7 years ago. In 2016, they still have not finished trials to prove that it's more effective than a placebo.
So, but Bob, this is a drug that I guess was approved to treat Duchenne, which is a muscular dystrophy disease that, unfortunately puts kids in wheelchairs at a young age. It's been around for 7 or 8 years. I'm guessing that some of these kids are taking it. Do we not hear from doctors, yeah, it's working, or no, this hasn't done anything?
Yeah, well, that's one of the really interesting things about some of these diseases like muscular dystrophy. Listen, they're just awful diseases in the long term. So there's lots of pressure from parents of kids, obviously, to just approve things because they feel they have, not a lot of hope without this. So it's totally understandable why the FDA would want to get something to the market quickly. And the problem is it's just very hard to do the trials. It's a very highly variable disease. And people, the long-term prognosis is awful. But in the short to medium term, it's just very variable from patient to patient. So it's just sort of hard to tell. But a lot of doctors are in favor of this, but there's still a lot of controversy, over like the part of the bargain for the drug companies is if you get these drugs to the market quicker using this sort of accelerated shortcut process, you got to hold up your end of the bargain and quickly, prove that it is, in fact, better than a dummy pill, better than a dummy shot, improving symptoms or, in this case, slowing the course of the disease. And then, and some companies have essentially kind of made, we say in the story, accelerated approval into kind of a business model. They get lots of these multiple drugs on the market, and then the trials to prove, whether they work or not are slower to come to fruition. And in fact, in some of the other disease areas, including cancer, where this accelerated process is used quite a lot, we found in our data analysis, there's that the number of withdrawals of drugs that had to be withdrawn because they got through this accelerated approval but were never proven to be effective, that's risen quite dramatically in recent years. In the last couple of years, there were 7 drugs that had approvals withdrawn due to not being able to prove that it was effective, or that those trials just never happened if they were delayed. So, there's a lot of controversy over this. Congress passed a new law to try to give the FDA some more authority to push back when companies were slow in performing the required trials, but it's not totally clear, how this is going to play out over the long term.
Bob, it's interesting. This accelerated approval pathway, I always thought it was just kind of always out there. But as you mentioned, it's kind of recent, created in 1992 in part to get promising HIV therapies.
That's reason for us.
Yeah.
That's not reason for everybody, Paul.
No, but I mean, I remember those times in the late 80s, early 90s when desperate to get something to market. And of course, the accelerated approval pathway was there. But is there pushback on the whole process of the approval pathway, this accelerated approval pathway, Bob? Because it seems to have done a lot of good, I think, as recently as the coronavirus vaccines. Is there pushback from either the medical community or the regulators saying, all right, I think you guys are maybe abusing this a little bit?
Yeah, so here's the thing. It started in a sort of fairly narrow way back in, as you mentioned, in 1992, when the HIV activists were really telling the FDA, we're dying left and right, and you guys aren't proving things fast enough. So it started in a fairly kind of narrow, targeted way, and then it expanded some to cancer. So what happens in accelerated approval is instead of approving a drug as effective, like it improves your symptoms or it slows the disease or it keeps you alive, all a drug maker has to do is prove, it improves kind of like a lab test or a scan result that is reasonably likely to predict, it's going to be effective or helpful. That's kind of the standard. They don't actually have to improve the disease process. They just have to show kind of some of the lab tests, improve. And what's happened over time is that this kind of the number of diseases that accelerated approval is used in has started to expand greatly. So it started as a relatively small, modest thing, and it expanded quite a lot to more controversial areas where they really don't have good lab tests that kind of predict the disease process in a reliable way. They don't really, understand, what lab tests will predict your disease course. And that's where the controversy lies. And the biggest area of controversy is that a lot of the critics say that, companies aren't holding up their end of the bargain in rapidly finishing the trials to prove that a drug works once they get something on the market, because once they get something on the market, they can sell it, they can make money off it, and and if they're not confident it's effective, they may, some of the critics would say they may even have an incentive not to proceed with the trials particularly quickly. You mentioned actually the FDA approval of the coronavirus vaccines. And so that, I want to contrast that there. That was actually not accelerated approval. That was something called emergency approval. And there's a big, big difference with emergency approval. It's called emergency authorization. With emergency authorization, if the FDA decides, hey, we don't think this thing no longer works, or is no longer effective, they can literally just rescind it the next day. And they actually did that with some of the monoclonal antibodies for COVID-19 that had emergency authorization. They said, hey, it's mutated, it's not working anymore, we're going to take back the authorization. That's not true for accelerated approval. It's very, very hard right now for the FDA to take an accelerated approval off the market, if the company is fighting it. And they just had an example that took several years for them to get it off the market. So it's a very big contrast with the emergency authorization process that was used with the COVID vaccines.
Yep. All right, Bob, great stuff. Great reporting. The Big Take story, we highly recommend that. You can read this story and other Big Take stories on the terminal. Just type in NI Big Take or go to the web, that internet thing, Bloomberg.com/Big Take. As Matt and I talk about these stories all the time, the Big Take story is just outstanding. Great topics, super in-depth reporting, lots of good data, lots of good graphics for me, which I like. That's very helpful. All right, right now, let's head down to Washington, D.C. We're going to get world and national news with Nancy Lyons.
Thanks, Paul. Ukraine's President Volodymyr Zelensky has been making the rounds. He stopped in the UK today to seek more support to counter Russia's invasion of his country. Today, UK Prime Minister Rishi Sunak pledged to supply long-range attack drones.
We will keep providing support, as you've seen today, with long-range offensive drones, for example, more anti-aircraft, and there will be further support to come.
Sunak did not, however, promise any UK planes. Fewer encounters are being reported at the southern U.S. border following the expiration of COVID-era restrictions. Homeland Security Secretary Alejandro Mayorkas tells CNN Border Patrol has experienced a 50% drop in encounters since Title 42 ended last week. He did admit, though, it's too early to say if the expected surge has peaked. The unofficial kickoff of summer is less than 2 weeks away, and if you're traveling, you will not be alone. Bloomberg's Nathan Hager reports.
This year's Memorial Day weekend is projected to be the third busiest kickoff of summer travel season on record. A report from AAA and S&P Global projects as many as 42.3 million Americans will travel at least 50 miles from home on the long holiday weekend. That's a 7% increase from last year, and it includes 2 million more drivers taking advantage of lower gas prices. Air travel is set to exceed pre-pandemic levels with 5.4% more passengers. In Washington, I'm Nathan Hager, Bloomberg Radio.
Americans are likely driving in an older car as they set out for the holiday due to skyrocketing prices for new ones. A new report shows the average age of light-duty vehicles on U.S. roads rose to a record 12 and a half years as of January 1st. S&P Global Mobility says that includes across-the-board increases for trucks, passenger cars, and SUVs. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ are all advancing. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green in another choppy session with the Dow currently up 44 points. S&P's gained 12 and NASDAQ is higher by 77. The U.S. 10-year yield at 3.5%. Gold is up 6. Oil is also climbing. And Bitcoin is higher by 1.7%. Of the main 11 S&P sectors, leaders were materials and the financials. Utilities and real estate were under pressure. And leaders to the upside in the Dow, Intel and American Express, while Verizon fell 1.8% and led to the downside. In deal news, one oaked by Magellan Midstream in a deal worth $18.8 billion. And in U.S. politics, McCarthy said on the debt talks there is no agreement on anything. In other news, Schwab rose 5% on a Raymond James upgrade. And wrapping things up, Gensler says the SEC is not currently weighing a short-selling ban. Live from the first word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, Matt Miller here in for Tim Stenovec. Paul Sweeney is filling in for Carol Sweeney.
Well, I wouldn't go that far. I'm just kind of
We're the
warm
guests.
I know.
We're the guest hosts.
We're just
kind of
taking over.
Yeah. Well, for one day at least.
Yes.
I am looking forward to talking to Stacey Sears right now, Senior Vice President and Portfolio Manager, Small Cap Growth Fund at Emerald Advisors, on Zoom from Pennsylvania, because there's so much going on, but it seems like markets aren't moving much at all on a broader, index level. Of course, it may be different when you're looking at a small cap growth fund. But Stacey, thanks so much for joining us. Let me first get your take on what the biggest driver is right now. Are you really that worried about the debt ceiling? The Fed is on pause. We're in an earnings recession, but it's kind of meh. What are you looking for to move this market?
Yeah, so from our perspective, ultimately it's going to come down to earnings. I think in the short run, you're right. We are likely in a trading range until we get some resolution to the debt ceiling. But in, full transparency, the debt ceiling is the devil that we know to a certain degree. Everyone would prefer not to have to deal with the risk, but it's not like we haven't been here before. So in the interim, the way that we're looking at the world, I think the rhetoric surrounding the debate is likely to continue to create some volatility, but we ultimately expect it to be resolved. Debt ceiling will be raised and we'll move forward. Admittedly, volatility here in the short run, probably some risk to rates, but ultimately we think the path forward was going to be driven ultimately by earnings, corporate earnings.
So, Stacey, our notes here just say that you're from Pennsylvania, but I think you're from Leola, Pennsylvania. Am I right?
That's correct.
And now, Leola, Pennsylvania, I had to Google it, so this is not just off, the top of my head. Yeah, 75 miles due west of Philadelphia is the way I'd phrase it. So do you guys go to Philly are you like Philly fans and stuff like that? Eagles and all that?
Yes, absolutely. I grew up in Philadelphia, actually.
All right, I love this stuff. Pennsylvania's a huge state, by the way.
I drive
through
it.
Oh, yeah, you drive through it every day to go to Ohio.
I'm from the great state of Ohio, so every time I have to go back and forth, which
you basically spend your entire trip in Ohio.
In Pennsylvania,
right.
Exactly.
Hey, Stacey, so I know you guys there at Emerald Advisors look at small cap. You're a PM on the Small Cap Growth Fund. Give us a sense of how small caps have done recently versus the rest of the market, and kind of how you're positioning small caps for some of your clients.
Especially like year to date. It's interesting because, Stacey, the S&P is up 8% year to date, but the Russell 2000 is unched.
That's correct. Small caps got off to a very strong start through February. Economy was improving, economic surprise data was positive. We were seeing, I think, some encouraging earnings revisions to the positive. Fast forward to March, the advent of banking stresses and the failure of Silicon Valley and Signature Bank really changed the landscape for small cap during the month. Small caps, as you know, are the more risk-averse area of the market. And I think, what we were seeing just from a broad perspective was risk inversion as the market was concerned of how the tightening of lending standards would roll through the small cap universe. So that has put us behind a little bit then on a year-to-date basis. As you mentioned, we're unched compared to the S&P. But I think if you dig below the surface, there's some really interesting things going on, particularly within the small cap growth area. The small cap growth area is actually outperforming the Russell Index overall, up about 3.9% on a year-to-date basis versus the Russell 2000, as you said, is unched. And within that, we're finding a tremendous amount of opportunity. I know March and over the last month and a half, a lot of the press has been focused on what's been going on mega cap tech. We have seen mega cap tech largely outperform broadly, but under the surface, we're really seeing some interesting opportunities within healthcare, particularly within biotechnology. I know the conversation prior to my joining was, on Sarepta and the advancements that we're seeing there in Duchenne muscular dystrophy. We think it's broader than that. There's a tremendous amount of innovation, again, that's really propelling growth in that sector. And it's an area that we're really excited about, beyond just biotech, but medical devices as well. Just a tremendous amount of innovation in orthopedics, diagnostics, testing, transplantation, for example. There's a lot of positive things going on in the small cap growth universe today as we see it.
It's interesting. I look at the Russell 2000 broken down into groups, and obviously financials are the biggest laggard on the year, down 19%. Energy is down 10%. But the biggest winners, consumer discretionary, even ahead of healthcare. I mean, you mentioned the healthcare stocks, Stacey, but a bunch of, I guess, consumer discretionary, kind of broadly defined, has really been killing it. Arlo Technologies, ThreadUp, Neo Games, Green Brick Partners. These are companies, for the most part, that I've never heard of. A couple standouts are Duolingo and Cinemark, Hovnanian, but it looks like you've got some runaway winners. I guess that's always the case in the smaller caps, right? You've got these, I guess, one-hit wonders or just knock out of the park home runs that you couldn't have guessed beforehand.
Well, there is a truth to that, right? I mean, small cap is great for enabling niche companies to exploit opportunities. And we definitely see that in the consumer sector, and particularly on the services side of the economy, right? We've been talking a lot about wallet share shift from consumption perspective. The consumer overconsumed goods over the better part of the last, 2 years post-COVID. And we've seen some renormalization of behavior and pattern spending back towards services. That's still durable from our perspective. We're seeing it in restaurants, we're seeing it in leisure, we're seeing it in recreational services. So while overall consumer spending is likely going to slow, we believe those services areas of the economy are likely to be more resilient and have identified significant opportunity there as well.
So, Stacey, just about 30 seconds here. Small cap banks, staying away from them for the moment?
We have been avoiding small cap banks. We lowered our exposure significantly entering this year. Again, from our perspective, profitability concerns, deposit beta, banks were paying up more for deposits coming into the year. That was going to have an impact on lending, going to have an impact on yields. So we were a little bit ahead of the curve there. Admittedly, did not see the stress, quite the level of stress that manifested itself in March. But we do think on a relative basis that area is going to be more challenged, at least for the visible future.
Stacey, great to have you with us. Hope we can get you back again. Thanks so much. Stacey Sears there. She is the Senior Vice President and a Portfolio Manager of Small Cap Growth, the Small Cap Growth Fund at Emerald Advisors. Matt Miller here in the studio with Paul Sweeney. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Microsoft's $69 billion takeover of Activision Blizzard won European Union approval weeks after the UK's merger regulator delivered a shock decision to veto the gaming industry's biggest deal ever. The approval means the fate of the deal now hinges on the firm winning legal challenges in the U.S. and U.K., likely an uphill task. Jennifer Rhee is Senior Litigation Analyst for Antitrust at Bloomberg Intelligence.
The issue is that if Microsoft has this must-have content in its hands, because it's also very strong in distribution, whether that's through console or whether it's through the cloud or a cloud subscription service, that it would have this ability, because people want Call of Duty and will switch over to Microsoft, that it has this ability to block out other potential cloud rivals, the ones that exist today and the ones that might be up and coming. And that's what the US and the UK agencies are trying to prevent.
And again, we do have shares of Microsoft up now by just about 0.2%. Activision up by 1.1%. A headline breaking now from the Bloomberg Professional Service. The U.S. government plans to buy 3 million barrels of oil for the emergency reserve. West Texas Intermediate crude oil up 1.7%, $71.23 a barrel. Sources tell Bloomberg activist investor Engage Capital has taken a stake in Shake Shack and plans to push for board changes at the burger chain. We've got Shake Shack shares up by 7.5%. Those are the company stories at this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Matt Miller here in the chair in the Interactive Broker Studio. Yep. I'm filling in for Tim Stenevec, who is out. I'm here for the summer. Carol Master skipped out of work today as well.
That's okay. She can do that. She's a pro.
We have Paul Sweeney on. Yep. Didn't bother telling him until he came in early for his early.
They told me. I just forgot until I was sitting on the train coming in. So that was all on me.
But the good news is you've had all day long to prep. And with these markets, maybe you need it. So there's a lot going on here. You've got to be watching out for the debt ceiling. You've got to be watching out for the Fed and inflation. You've got to be watching earnings just coming to an end, which means earnings season is just about to start. In the meantime, we've got some interesting little stories here and there. One of them I noticed is Michael Burry, famed investor from The Big Short.
Right, and he was portrayed by Christian Bale.
Yes, I was struggling to remember that name. So Christian Bale does an awesome job playing Michael Burry.
Crazy good actor.
I don't know Michael Burry personally, so I don't know how well Bale nailed it, but I love the character in the movie. Listens to a lot of metal, plays the drums, and makes big bets. Well, Michael Burry apparently has loaded up on regional banks during the first quarter, so that's his big bet. He, at Scion Asset Management, that's his hedge fund, bought 150,000 shares of First Republic, which is the failed lender that recently bought by J.P. Morgan Chase. But he also had bought 250,000 shares in PacWest, 125,000 shares in Western Alliance, 850,000 shares in New York Community Bank Corp. So
my question is, when during the quarter did he buy him? I mean, you could be a really bad buyer here, as you know, losing 50, 60, 70%, or if you bought him after the sell-off. Although there was a second sell-off.
Exactly. So I feel like it's either it could be bad or it could be worse. Because if you bought them before March 8th, then you are in real trouble. If you bought them after March 8th, then hopefully you got rid of them before the second sell-off around the middle of May.
And if you bought them, I don't know, and if you're long-term, a lot of folks are saying some of these are really good banks here.
Yeah,
but I don't know.
Bill Gross said to me, he's like, if I don't want to start my own bank, right now I can buy these because I get them for 60% of book value. And so that's what he's doing as well. But I guess Michael Burry is joining his crew. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Matt Miller and Paul Sweeney. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. A focus on the markets, but I think, guys, the markets right now are very focused on Washington, whether it's the Fed, whether it's Congress, or the White House.
Yeah, absolutely. I mean, it's all about the debt ceiling. Tomorrow, the president's going to meet with congressional leaders, so McCarthy and probably a whole team of people on both sides. Obviously, I heard Joe Matthews saying Mitch McConnell's going to be there as well, even if nobody says anything to him. So hopefully they get something done. Their staffs have been working closely. It looks like the market isn't terribly concerned, right? We have the S&P right now at 4134. So that if we're going to default, if the U.S. is going to default, you probably see a much bigger sell-off. And if they're concerned, you'd see it already happening.
It's also not late May, like 2 days before June 1st.
Right.
Well, I mean, just to point out, though, I mean, I do think it's interesting, though, when you talk about some of the short-term bills out there. I mean, you got a 12 basis point move on a 4-week bill right now, which shows you that no one really wants to own that, or if they are willing to own it, you're going to have to compensate them pretty heavily to take on that risk.
You know, Matt Miller and I were just talking to a small cap portfolio manager out in the great Commonwealth of Pennsylvania, and she and her team are very cautiously approaching this market here. There's just so many cross currents out there that they have to navigate, that they have to discount, as we mentioned, again, with, you know, the debt ceiling and the Fed and earnings and banking issues and geopolitical issues here. So for the people that are paid to put money to work out there, they're being very cautious. And I think you see that in the trading volumes as well as the kind of lack of volatility here.
Yeah, lack of volatility, lack of turnover here. Nevertheless, you do have a few big cap tech names that are solidly in the green, and that's a big part of the reason why you're seeing all of the major indices finish the day in the green. The Dow Jones Industrial Average higher by about 50 points, or about 0.1%. The S&P higher by about 12 points, or 0.3%. The Nasdaq Composite is going to finish the day higher by about 80 points, or 0.7%, while the Russell 2000 is your relative outperformer, closing out the day higher by 1.2%.
All right, I'm looking at some of the winners in terms of the individual names that we've seen. Alibaba is one that we saw up in U.S. trading, and there are a few other Chinese companies up in U.S. trading after the SEC cleared their annual report. Hong Kong exchange filings showed that the SEC has completed its review after several interactions with the company, including apparently the SEC asked Alibaba to disclose its Cayman Islands holdings company with a variable interest entity based in China that involves unique risks for investors. Those of you that got caught up in the Chinese sell-off of the last couple of years know about that. Meta also rose after Loop Capital upgraded the owner of Facebook to a buy from a hold, talking a lot about the Reels. I assume that's their Vine-like product. In any case, apparently Reels is a big deal for the kids. That's on the Instagram unit. Shake Shack also up. People familiar say that Engaged Capital, an activist investor, has taken a stake in the burger chain, which makes delicious food. And then Western Digital. Romaine, you were talking about this earlier up as Bloomberg Intelligence says progress on the company's merger talks with Kioxia.
Yeah, I just avoided pronouncing it.
Yeah, it's a Reuters report, so BI picking that up and saying it's an encouraging sign.
All right, that's the micro look in terms of movers that are moving up to the upside. Let's take a look at how the sectors are performing or finished the day, really. And you can see chip companies did incredibly well, up 2.4%, all but one name finishing higher. Banks also an outperformer today, up by 1.9%, although it's notable that the smallest gainer in the bank space was the biggest bank, JP Morgan Chase. Materials, capital goods also gaining at least 0.5%. On the downside, what I found was interesting, if you want to try to divine any themes from the movements today, is that groups that are traditionally safe havens have fallen the most. Utilities, for instance, food, beverage, and tobacco, food and staples, all down to the downside, although the moves are nothing like the gainers that we have in the industry groups today. Paul?
Yeah, looking at the losers here, the biggest loser in the S&P 500 is One Oak. OKE is your symbol, is involved in that acquisition today announcement, buying the Magellan Midstream Partners for $19 billion. The street doesn't like it. The stock down on about 9% here, and that's bad news if you're the board, if you're the CEO, if you're the financial advisors. It just doesn't look good. And I saw the Mizuho analysts. I was reading some of their research, and they just said simply, It doesn't make sense to them. The other thing I'm looking at, the tower companies, American Tower, AMT, Crown Castle, CCI. These are companies I know very well. These are the tower companies. They leased space on their towers all over the world for the wireless carriers. They're all under pressure, and they've been under pressure for the last several months. This 5G rollout is going slower than expected, so that's causing a lot of these companies to scale back their growth outlook. So we'll keep an eye on them.
Yeah, let's take a quick look at what's going on in the yield space. There was a lot of activity there. Your two-year yield only slightly higher on the day. Right now, still camped out just under 4% here, and you saw a little bit more activity on the longer end of the curve. And we should point out this is actually a selling on the longer end of the curve. That actually pushed the 30-year yield up by about 5 basis points. And we don't have it on the screen there, but we should point out we continue to see a lot of activity in those short-term T-bills. There's a lot of people continue to sell out of that space, really shun that space. It'll be interesting to see whether this week's auction actually shows people coming back, but we're now looking at yields above 5.5% here on just 4 weeks out. Of course, 4 weeks out would cover, if you believe Janet Yellen, the so-called X date of when the U.S. Treasury would effectively see its coffers run dry. And that's really been the big focus here, guys. I can't remember the last time where Washington has really dominated what's going on in financial markets to this degree, between the Fed hiking cycle and the debt ceiling debate and everything else in between here. It just sort of makes you wonder when we get that all clear, some sort of a green light, that maybe it's safe to come back out.
Well, I mean, this now plays to Washington drama, right? Let's see how much leverage they can get. June 1st is the X date that Janet Yellen had identified, but if they can get to June 15th, that's when a new batch of tax revenue comes in from companies, and that might be able to hold the Treasury over until, what, July, August, we're hearing?
Yeah, well, unfortunately, though, some of the notes I've read out there are saying that those tax receipts are going to be a little bit lower than what they would have expected. So, yeah, it definitely buys them some time, but it's maybe not going to be on par with what they got in out of the 2020.
We need to do more with less, Romaine.
Stop it, Matt.
Are we going back to that?
No, I'm not going to touch that.
Now, Scarlett,
that's an inside joke for our viewers and listeners here.
Who watch us
that is
every
probably going
day.
to get Matt Miller fired.
I don't know if you recall, on Friday, they said we only had $88 billion left, right?
Yeah.
Well, now there's less than that.
There you go.
All right, you know, we're all looking down at Washington, D.C., of course, and we'll get hopefully some news starting tomorrow, but we're about 90% of the way through the earnings, but we still have some pretty big sectors and names coming up here that need to pay attention to. We're going to have some of the big retailers coming up, and even some of the smaller retailers. I like to look at the Dollar Tree stores and the Walmarts and kind of see how they're doing.
Why?
We also have some tech names coming up as well, so we still have some earnings coming up over the next couple of weeks, so we'll pay attention to those.
I am curious, though, about on the retail side. I mean, you mentioned the dollar stores. Is the idea that with the lower income consumer, is that going to be much more of a read on, I guess, how stable things or maybe how loose things are right now?
Yeah, absolutely. I think you start with Walmart and then you go down to all the way through the retail stack, and you hear different things because you talk to the luxury makers. They're doing great.
Yeah, exactly. They have plenty of pricing power. Don't worry about them. Also, retail sales numbers come out tomorrow, so it's another way of looking at the consumer and how they're holding up. And remember, up until this point, with the job market pretty tight, the consumer has held on very well. So you've seen consumer discretionary companies, consumer staples companies do pretty well.
Well, but we've seen the savings rate come back down to zero, right? Bank balances are starting to float down. Credit card debt is rising right now, so the consumer is struggling a little bit there. And even, if you get higher sales, corporate America can't turn that magically into bigger margins, right? We're seeing an earnings recession, so sales can rise, but earnings are shrinking.
And remember, a lot of that sales growth that we're seeing, at least coming out of that headline number, of course, not inflation adjusted. So it'll be interesting to see that with inflation sort of being tamped down, at least on a year-over-year basis, how much that affects the number. The other thing, though, we were talking about a little bit earlier with one of our guests on Bloomberg Television, is that a lot of these companies have really lost their pricing power. They just don't have it in the same way that they had it even just a few months ago. So this begs the question here that if prices are still elevated and they're not cutting, are they still going to be able to get people in the door to buy?
Yeah, it's interesting. I mean, you think about some of the consumer products companies we've heard from earnings-wise over the past couple of weeks, the Coca-Colas of the world. They said their volumes are flattened down, but the pricing is up, and they're able to kind of hit their numbers. The question, I think, for a lot of investors is how long can they do that going forward?
Paul, you look like you're probably a Balenciaga guy, right? You wear those big, chunky, ugly shoes.
Matt Miller's the clothes horse in this.
On the count of three, everyone say their favorite brand, okay?
we not
No.
playing? Converse. Converse.
Matt was ready to
No one
go.
played. No one
Chuck
played.
Taylor's.
Office Depot.
Office Depot. You're always working, Matt.
All right. Well, we're going to talk to the CEO of Office Depot next, which is why I said that.
Mine is Shake Shack.
How's that for a
That
segue?
does it for our cross-platform coverage of the market close on Bloomberg Television, on Bloomberg Radio, on YouTube, as well as now Bloomberg Originals. And we'll be back tomorrow, same time, same place. Which is why I mentioned that as a brand here. As we're throwing around some names, Paul pulls out Converse. Why did you say Converse?
Chuck Taylor's, the all-time classic shoe. I just bought a new pair this weekend. That's top of mind.
That's cool. So you don't wear loafers all the time?
No, I don't. Occasionally I'll go a little casual.
That's interesting. I'd love to see Paul Sweeney on a weekend. Well, maybe you put on those Chuck Taylors to go pick up a shredder, or
yes,
a paper cutter, or a fax machine.
You know what? It's the toner that gets you. The print, the ink for the printer.
It's the printer ink. I'm always like every few weeks I'm back at an Office Depot or a Best Buy looking for that, because if you don't print every day, it runs out quick. Let's get to Jerry Smith right now on Zoom from Boca Raton, Florida. Jerry, thanks so much for joining us. Talk to us about the transformation. I mean, obviously people aren't going to be coming to Office Depot for fax machines anymore. I don't know why I said that. But they are going to need the printer ink. What else are we looking for at Office Depot? And how does Office Depot look different now than it did when I went there, say, 10 years ago?
Yeah, thanks, Paul and Matt, for having me. I've been here for about 6 years, and let me talk about the transformation. We have a strong B2C business, our Office Depot brand that you know. It's about a $4.5 billion company. We're going into category expansions, whether it's party supplies, dorms, tech, furniture, copy and print. So we have a wide range of products. Again, that's about a $4.5 billion business. We call it our first horizon. It's our cash engine for the company. But we have a $4 billion B2B business that's growing. We crushed our earnings. We met top line. We beat both operating income, EBITDA, as well as earnings per share by 40%, and really good free cash flow as well. We also have a supply chain services business, as well as we're creating a new category called Verus, which is a B2B procurement platform. The team that developed the $35 billion Amazon business platform now are here at ODP. We're running Verus, and we're building a direct B2B procurement relationship that will be all indirect spend. I love hearing you guys talk about all the different products you can buy to run a business. It's exactly what Verus is. We launched that platform in October. We're just early days, but we're ramping that now. But we're really excited with the new Office Depot. We think we're super undervalued. We're less than 4 times EBITDA from a multiple perspective, and I've got a growing B2B. Half our business is B2B and growing, both top line and bottom line. And we have these 2 non-valued assets we think are going to be worth a ton of money in the future as well.
Hey, Jerry, when I think of Office Depot and I think about the growth drivers of your business, I often think about new small business formation. I gotta get that right. Where are we now in the economy, potentially one going into recession? How do you guys think about new small business kind of formation?
Hey, great question. We saw a lot of strength in Q1. I was listening to you guys as before we came on, and we saw strength in small business. We saw both on our B2B business, ODP Business Solutions, as well as we have 3 segments on the retail side. We have home office, we have small business and education, and small business across the board. I think it's behaving stronger than the consumer. A little bit of softness in the consumer, not a lot, but we're seeing a lot more strength in small business. We actually saw small business come out of COVID faster than any other business. So we still see a ton of strength in small business and medium business. And so why we have these 4 different routes to market. We think it's a big available market, but we're still seeing strength. We are being cautiously optimistic, of course. We have a net cash positive balance sheet. We've saved over $500 million of expense over the last 6 years, and I'm always talking about the low-cost model. So we're not going to get ahead of our skis. We're going to make sure we're conservative. And again, having a strong balance sheet compared to some of the other retailers you were talking about before, we're in a really strong position. We're a true omni-channel company. And so we think we're positioned well, but small business is an area we're focused on really hard, and we're excited with the potential there.
Who are your big competitors. As Paul Sweeney knows, I like to pull up a comp screen on the Bloomberg just as a standard. It gives me a 5-year look at your stock performance. And if I put you up against Home Depot and Bed Bath & Beyond, which are two companies I would think of, you crushed them. You know, you doubled over the past 5 years, whereas Home Depot's only up 72%, Bed Bath & Beyond is only up 8%. Who else are you looking out for? I mean, should I be running you against an Amazon, for example? Is that your biggest competitor?
I think it depends on which space of our go-to-market. So we have these 4 different business units. From a retail perspective, I think it's good analysts right there, and obviously Staples is private as a company now, so hard for a compare. On the B2B side, it's Staples, it's WB Mason, both private companies, as well as a little bit if you look at some of the Fastenals or the Grangers of the world from a MRO space, they come down sometimes. But it's pretty open space from a competition side. And because the fact we have our VER supply chain business unit, we have 9 million square feet of distribution space, 600 trucks. We're one of the few companies that delivers next day in 99% of the zip codes. And not just to the back dock, to the desktop, which is a really competitive advantage. Only us and the other guys up in Massachusetts really can go off and have that type of delivery. So for that Fortune 500 account, that's our only competitor. And then from a supply chain services space, we're ramping that business up. We have all that asset. Obviously, it's traditional 3PLs. And I want to call out Veris, and we'll come back in the future as Veris ramps up more of it. This is a category creation. No one's entering the space. We think it's a huge space. That team came over because they saw the opportunity, and we think it's about a $400 billion space of indirect spend B2B across the U.S. And so from a competitor space, we're really excited. Year 2, year 3, year 4, that's going to be a huge value opportunity for the company.
Hey, Jerry, Matt and I are probably outliers here. We come into the office every day of the week. That's just how we roll. Plus, we were told to do that. We don't have a choice. But most people are kind of really embracing this hybrid thing, 3-4 days or whatever it is.
Home office.
Home office. So how did that impact your business over the last 3 to 4 years, and kind of how about going forward?
Yeah, great question. I mean, obviously during COVID, when everything was shut down, we had a bit of everyone had the dip. We obviously focused on cost well, but hybrid's awesome for us. And so we're back to on our traditional B2B business, almost our 2019 pre-COVID levels of performance. And that's we get a lot of data. We're looking at badge swipes, and that's only about 50 to 55%. But we do believe hybrid. I don't think people buy office supplies when they have a hybrid business anymore. I think they come in, they're using office supplies in the office, and we love that. So obviously that helps our B2B business. On the B2C side, obviously COVID was really good for that. And so that's why we're focused on home office as well as small business on our B2C side. And obviously Veris is online, and that obviously is very, I'll say, inflection proof in the future as we go through that. And so again, having that supply chain business, they can deliver the next day, they can deliver to a store, they can deliver to a consumer, they can deliver to a small business. But we're really optimistic right now, obviously, with the return for office as a tailwind. You see more and more people going from every day. I see another company announcing. I saw Dell today announcing they're going to go back to more of a hybrid. And so hybrid is really, really good for our business and a tailwind. And we've adapted our business to have that flexibility. For example, our retail stores is the only one in the country that has a 20-minute guarantee when you order online and pick up in stores, that will give you $20. And so we put a lot of work and effort by that, and we think that's a huge differentiator. People do want to go, and they need something immediately. Our store team will do a great job, and we run a 77 Net Promoter Score, which is world-class from a customer experience perspective as well. So we're happy with the tailwinds. Obviously, if everyone returns to office, it gets even better, but we think we're in a really position well across all our routes to market.
Jerry, fascinating stuff. Great to have you on the program. Thanks so much for joining us. Jerry Smith there, the Chief Executive Officer of ODP Corp. It's the parent company of Office Depot. And I wouldn't have known that they doubled their stock over the past 5 years had I not looked up the company there. I also wouldn't have known about Veris because as a B2B digital platform, it's not something that the public kind of sees.
No.
And of course, analysts will know about it, but this is why we do these kind of interviews.
Exactly.
It's an exciting product, obviously, for Jerry, and they've got big competition in Alibaba and Amazon. But they have, it looks like the brain power, the people power to really move that market.
Yeah, when we have these company CEOs on, I tend to cheat a little bit. I'll message the BI analysts and I'll say, hey, you got a couple smart questions.
So you knew about
Veris. I knew. Yeah, so Jen Bartashis, Bloomberg Intelligence, he's got all the research on ODP is the ticker to put in there. So interesting stuff.
We're down with ODP.
Sure.
Yeah, you know me.
Yeah, exactly.
All right, we got a lot more coming up on Bloomberg Business Week. I'm Matt Miller with Paul Sweeney. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We begin with a developing story. Treasury Secretary Janet Yellen says debt limit measures may be exhausted as soon as June 1st. A headline on the Bloomberg Professional. Yellen says borrowing costs for early June debt have risen. And sources tell Bloomberg the U.S. is preparing to buy up to 3 million barrels of sour crude oil to begin refilling its depleted Strategic Petroleum Reserve. West Texas Intermediate crude up 1.8%, $71.31 a barrel. The Dow, the S&P, and NASDAQ all advanced today, but stocks do remain stuck in a tight range as investors wait for clarity on whether lawmakers will be able to reach a deal to avert the default. S&P up 12, up 0.3%. The Dow today up just about 48 points, up 0.1%. NASDAQ up 80, a gain there of 0.6%. 10-year yield at 3.50% with the 2-year 3.99%. Spot gold up $4 the ounce to $20.15. That was a gain of 0.2%. West Texas Intermediate crude up 1.8%, $71.29 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you very much for that Bloomberg Business Flash. We didn't see a lot of real action in these markets today, did we?
No, we did not. And again, the volume was 10 to 15% below the trailing 30-day average. Actually, on the S&P, about 11%, 19% below on the Dow Jones, about 15% below average on the NASDAQ. It's everybody's just kind of waiting to see what we're going to get out of D.C. Over the next couple of days. Just any light at the end of the tunnel. We're talking. We're not yelling at each other. Something along those lines would be helpful.
It's interesting that you had, I guess Scarlett said, the term sell-off is a little generous, but you had on the downside all these all these defensive stocks, not consumer discretionary. That would be the opposite. You did see consumer staples sell off. You saw utilities sell off. Real estate and healthcare were down. So these are the companies that you buy if you're girding for, catastrophe. Girding is one of those words. I like
it's good SAT word.
Mulling.
Although SATs don't matter anymore. Schools don't care. They don't want the SAT.
Seriously?
Seriously.
Well, hopefully the kids take SATs just to see how they would have.
No SAT prep. That saves you some money. No SAT anxiety. Awesome.
You know who I'm going to guess did amazing? I would guess he did an amazing job on the SATs, but he's Canadian.
So
and I don't even think they have SATs up there.
It's just you walk in the door, you're good. Your money's good.
Eric Schatzker joins us right now, editor at large, and he basically runs the Bloomberg New Economy business for us, the New Economy Forum, NEF. And he joins us now to talk about the Qatar Economic Forum next week. He's going to be conducting interviews there. The big boss is going to be there as well.
Oh,
big boss.
Sure.
Eric, what are we looking for at the Qatar Economic Forum powered by Bloomberg?
Well, we'll see a lot of the Qatar Economic Forum. One of the things that
where can we see it, by the way? Where is it? Live Go that we'll see the interviews?
I believe you can find it on Live Go. It'll be live streamed on Bloomberg.com as well.
Oh, that'll be good. Okay.
And
that's
so,
where we're gonna get our audience
yes, it's much better to be at the Qatar Economic Forum in Doha, but if you can't make it, you can see most of what happens.
They need me here
on
Eric,
site.
so they need me more here. So I'll be here.
I was, of course, speaking directly to you, Paul.
Exactly.
Now, what's important to talk about in the context of the Qatar Economic Forum is really what's happening with Middle Eastern capital. Right, the Gulf region has become the marginal capital provider to the global investment community, and this has happened certainly in the space of a decade, but a lot of it has happened in the space of a short few years. I happened to look today, because this is something I've been thinking about, at where the Gulf region sovereign wealth funds rank among the world's largest sovereign wealth funds, and you have four, in fact. You have the Public Investment Fund of Saudi Arabia, you have the Qatar Investment Authority, you have the Kuwait Investment Authority, and you have the Abu Dhabi Investment Authority, ADIA. Those are four in the top 10. Collectively, they manage $2.7+ trillion. Wow. And that is more than $1 trillion more than they managed only 3 years ago.
Wow.
Is that?
So you can see what's happening here. It's not just how much money they have, but it's how much more money they have so fast.
What
so
have they
quickly.
done to build up so much capital so quickly?
They're called petrodollars, Matt.
Yeah, I know, but they've been selling oil for a long time, right? All of a sudden they...
Oil has been expensive since the dark days of the early part of the pandemic. And they're managing their wealth. Well, they recognize that these vehicles, by the way, serve a number of different purposes. Not all sovereign wealth funds are created equal. Some are so-called future generation funds, like the Abu Dhabi Investment Authority. That is, they're making strictly financial investments for the good of the people of Abu Dhabi henceforth. The idea being, of course, that if they make smart investments and those investments generate handsome returns, then the people of Abu Dhabi, regardless of how much oil or gas they have in several decades from now, will be well sorted. Other funds like Mubadala, also from Abu Dhabi, also from the Emirates, are much more oriented toward economic development. And so what Mubadala wants to do is not just promote economic development for the benefit of Abu Dhabi in the long run, it actually wants to benefit Abu Dhabi in the short run. They want to diversify the economy.
That's what I want to go to. Are these funds planning for either or both of the day when either they run out of oil or the world has gone green and we don't need their oil?
Increasingly both, but let's be honest, that is a distant future.
Right. I sure hope so.
But if you don't make smart investments, the gasoline consumer on the other side of the table here, if you don't make intelligent investments today and pave the way for that future, you won't have one. And the Saudis are thinking the same way, the Kuwaitis are thinking the same way, the Qataris are thinking the same way, the Emiratis are thinking the same way. And because they have so much oil revenue, they have now become this marginal dollar. It's no longer the Chinese, for example. It's no longer the South Koreans. It's no longer the Norwegians.
Yep.
It's all of these countries clustered around the Persian Gulf.
It was Japan, then it went to China, then, and now it's the Middle East, and I don't know, again, what changes that other than they run out of oil or something?
Well,
nothing's going to change in the short run. But what it does do is it changes the dynamics of investing. If you are an LP, a traditional LP, like Yale University's endowment, or maybe Harvard's is a better example, or California State Teachers Retirement System, you used to be big enough and powerful enough to dictate the terms of a fund. You could wield influence such that you were kind of like running a creditors committee, right? Like you were the powerful seat at the table. Not any longer. That's the Middle East. They decide what the terms are going to be. And so instead, for example, the Californians, presumably if you're a pension fund, you want to chip away at fees. No, what the Middle Eastern sovereign wealth funds are interested in is co-investing. They're not so worried about the fees. They want to have a piece of the action because they've got so much money, they need to find other opportunities to deploy it. And it's changing the dynamics of being an LP.
Is there any, obviously the Khashoggi incident set the Saudis back a little bit in terms of international relations. That seems to have been mended now. Is there any concern in that
I sure hope it hasn't been forgotten, but yes, I would agree that time has, to a large degree, healed that wound. The Saudis began the convenings in the Middle East with the Future Investment Initiative back in 2017, and it was shortly thereafter that Khashoggi was murdered, and there were all these questions about who would go back to Saudi Arabia. Well, the reality is they're not only going back to Riyadh for the FII in October. The Public Investment Fund, the Saudi Sovereign Wealth Fund, decided 2 months ago to convene an event in Miami. Money. The Saudis and other Middle Eastern pools of capital are very much in the sports business, right? They're now investing in soccer players. They brought Cristiano Ronaldo over to the Saudi League, and they're talking to Lionel Messi about as much as $400 million a year to play Saudi soccer. That's good. They were in talks earlier this year or late last year that ended up going nowhere, but to buy Formula One for $20 billion.
I'm going to watch that.
And they are players. You know, the royal family in Abu Dhabi owns Manchester City or controls Manchester City. In the Premier League, you've got the PIF, again, the Public Investment Fund of Saudi Arabia that owns Newcastle. I don't think it's unreasonable to suggest that we're going to see, in a not very long span of time, much more of this.
I'll tell you what, the only reason you won't watch Live Golf is because the PGA still exists, right? If that had worked and Live Golf had become the main event, you would be watching Live Golf.
Yeah, probably, but it's the Saudi Arabia 9/11 thing done. You know, not even a shot there. So We'll see. But you guys,
Those
I think
will
these
fade.
guys are going to be breaking news in.
What's happening?
Qatar.
And by the way, we've lost a little bit of focus. The Qatar Economic Forum, powered by Bloomberg, is an amazing event. I can tell you what I'm going to be doing. I'm going to be talking to Steve Mnuchin, the former Treasury Secretary, and I'll be interviewing Robert Friedland of Ivanhoe about the critical ingredients to the energy transition, which is something that he has a lot to say about.
Very cool. Also looking forward to hear what Dave Calhoun has to say, the CEO of Boeing.
He'll be there?
Up there, as well as Steve Schwartzman. So, Eric, thanks very much for coming in. Eric Schatzker there, the head of the NEF. This is Bloomberg. Let's get now to Nancy Lyons in our Bloomberg 99.1 newsroom in Washington, D.C. for the World National News Check. Nancy?
Thanks, Matt. Talks to address the debt ceiling are set for tomorrow. President Biden is sounding hopeful, but Greg Valliere with AGF Investments tells Bloomberg there's a risk that positive sentiment could be a fake out.
I think there is agreement on certain big concepts like a cap on spending, clawing back some money from COVID. That's encouraging to see. But these are complicated issues that could take weeks to fully resolve.
AGF's Greg Valliere says there will likely need to be short-term debt ceiling increase to iron out those details. The special prosecutor assigned the task of looking into possible FBI misconduct in the probe of ties between Russia and Donald Trump has finally released his report. John Durham offers harsh criticism of the FBI, saying the probe should probably not have been opened, but he failed to uncover massive wrongdoing. Ukraine's President Volodymyr Zelensky's surprise trip to the UK is reaping benefits. Prime Minister Rishi Sunak has pledged support for a coalition to help provide Ukraine with a fleet of Western-made fighter jets. Turkey's presidential election is heading into overtime. The country's election board has declared a runoff after incumbent Recep Tayyip Erdogan and his main rival failed to clear the 50% threshold. European Commission President Ursula von der Leyen says she's encouraged by the strong voter interest.
I think the massive turnout in these elections is really good news. It's good news because it's a very clear sign that the Turkish people are committed to exercising their democratic rights to go and vote, and that they value the democratic institutions. This is a big, big win.
European Commission President Ursula von der Leyen. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, and NASDAQ all advanced today. Treasury Secretary Janet Yellen is reiterating her warning that her department could run out of cash as soon as June 1st unless Congress raises or suspends the federal debt limit. The stock market remains stuck in a tight range. Investors waiting for clarity on whether Washington will be able to reach a deal to avert a default. The S&P today up 12, a gain there of 0.3%. We had the Dow higher by 48 points today, up by about 0.1%. NASDAQ up 80, that was a gain of 0.7%. 10-year yield 3.50%, 2-year 4.00%. Spot gold up 0.3%, 2016 the ounce, and West Texas Intermediate crude up 1.9%, 71.34 a barrel. Well, as for the overall market outlook, Stacy Sears is portfolio manager at the Emerald Growth Fund, and she was a guest right here on Bloomberg Business Week.
We are likely in a trading range until we get some resolution to the debt ceiling. But in, full transparency, the debt ceiling is the devil that we know to a certain degree. Everyone would prefer not to have to deal with the risk, but it's not like we haven't been here before.
Earnings season winding down, but this week we will be hearing from a number of major retailers, including Walmart and Home Depot. Their reports will provide insight into one of investors' biggest concerns, and that is the resilience of the consumer. Walmart reports on Thursday, down today by 0.8%. Home Depot reports tomorrow, down 0.7%. Recapping stocks higher today, S&P up 12, a gain there of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much for that Bloomberg Business Flash. Matt Miller here in the Bloomberg Interactive Brokers studio with my old partner in crime.
Old running mate.
Paul T. Sweeney. We are filling in for Carol and Tim, who are out today, and we're looking at the impact of the bank collapses that we've seen this year on the startup world. For that, we want to bring in Jack Selby. He is the managing director over at Teal Capital. He joins us on the telephone from Phoenix, Arizona. Jack, great to get some of your time today. We've had a couple months to digest the collapses from Silvergate and SVB to Signature and First Republic. A lot of these banks, obviously very tech focused, and a lot of startups and VCs counted on their funding. How is it playing out thus far? 2.5 months out.
Yeah, Paul and Matt, thanks again for having me. I appreciate it. I think there have been some really interesting takeaways, especially from the SVB collapse. So I think on the one hand, to the discredit, I would say, of Silicon Valley and the tech world overall, it was pretty amazing after the fact for us all to learn that we had so much concentration risk with one institution. And so, the analogy I would give you, imagine if every corn farmer in Iowa had money at, the First Bank at Des Moines, and then, there was a dry season. That obviously would be an exceptional crisis. And that's effectively what has happened, with us in Silicon Valley, having so much exposure to one bank. And so, shame on us from a fiduciary responsibility perspective. And I think it's a really eye-opening outcome. And I think going forward, we will definitely pay a lot more attention to kind of the sleepy world of Treasury and how we manage our cash, both within, our various funds and how our portfolio companies manage their cash as well.
So, Jack, we're trying to move on from that. I'm sure the VC community is trying to move on from that. In your world in Arizona, I know you've got a fund there that focuses on Arizona. Give us kind of like the pros and cons of the VC environment community in Arizona.
Sure. So, I started a $115 million fund, AZVC, here in Arizona that launched last August. And so, really what I'm trying to do is fill what I think is the biggest void in the local Arizona ecosystem. So, as an example, Phoenix is the 5th largest city in the United States. We have people moving here every single day. Maricopa County, I believe, has been the largest growing or the fastest growing county in the United States for the last decade. And so we're growing by leaps and bounds. But at the same time, to give it balance, this has not been historically a top tier capital market city. So as an example, like when we were doing our PayPal IPO roadshow many years ago, you would never stop through Phoenix on that roadshow. You'd go through smaller cities like Minneapolis and Philadelphia and Boston, certainly. But Phoenix, for whatever it's worth, has just not been a top-notch capital marketplace. And so having lived here since we sold PayPal, 20 plus years ago, I wanted to figure out a way to solve that void. And so I figured that after kind of studying the market here and trying to figure out the best way, my end result was to do it myself. And so that's why we launched the fund. And I think there's a great opportunity here just because, again, this is a population center that, again, has not had the capital to match.
By the way, tell us about how you made that decision. I mean, you killed it as a member of the PayPal mafia. Hope you don't mind that term, but I love it. And then you pick Phoenix, which is an awesome place. I've been there a couple times.
Wait. It's 100 degrees today. Tomorrow it's going to be 100 degrees. And it's going to be 100 degrees, Jack, until I come from my annual holiday in mid-November when it's a lovely 85 degrees.
But it's still, such a cool place. Have you been to Phoenix, Paul?
All the time. We go to
I love it
Tucson.
there.
I mean,
Sedona, Scottsdale. You can get to Tempe, Flagstaff. Like, what made you pick Phoenix?
Well, first, of course, I have to say, as a good Arizonan, it's a dry heat, gentlemen. Of course.
Yes, of course. Thank you. I knew that was
so. But that aside, it was really a family reason for me. My dad was a Mad Men era advertiser who worked for J. Walter Thompson.
Some stories.
So we moved a ton during my childhood. We moved 7 different times, and actually the 7th time was in the middle of my senior year of high school, and my dad came down to Phoenix to take a job, and so I stayed where I was, which was in suburban Detroit, to get through high school, get through graduation, I should say. But my dad moved down here. My younger brother ostensibly grew up here in Scottsdale. And so if you fast forward to today, my dad lives 5 minutes away from me. My brother has a house here. And so it was just a really easy choice to come back and be near family because I knew the place pretty well. And I still have to go back and forth to California quite a bit, but proximity matters. And so I think that's one of the big things that Arizona is going to benefit from because, California, one of our favorite sports here in Arizona is the California Bash. So I won't get on that topic too much, but I think the exodus out of California has a long way to go. And not everyone's moving to Austin. Certainly not everyone's moving to Miami. And if you can drive to Phoenix in 5.5 hours, or if you can fly there on a 45-minute Southwest flight, proximity makes a big difference. And that's why, again, another bullish reason, I think, for our tech ecosystem, we've got a long way to run.
All right, so tell us about some of the coolest businesses that you're into. What's coming out of Phoenix that's going to change the game for America?
That's a great question. And so I think, as I look at the fund that we've raised here, we have, I think, 8 investments so far. There's really no rhyme or reason in terms of the different sectors that we've invested in to date. And I think it's just because the ecosystem here is so nascent. And if you ask me the same question in 5 years, I could probably give you a much more sector-specific answer just based on where we've deployed capital. But frankly, I'm just looking for rock star entrepreneurs. And if I can wrap my head around what they're doing, then we'll take a look. And I think what Arizona will be good at is that where traditional industry is meeting technology for the first time. So, for example, think about the biggest outcome that we've had here in terms of a publicly traded technology company. So that company is Carvana. And so what is Carvana? Carvana is a used car marketplace. That seems like a perfectly reasonable type of technology company to come out of Arizona. To put it conversely, do I think the next open AI is going to come out of Phoenix? Frankly, I don't. I think that's going to be the domain of the Stanford, Palo Alto, Boston, MIT crowd. And I don't think there's anything wrong with that, but I think we just have to understand here in Arizona what we have a strength in and where we may not.
All right. Jack, great spending some time with you. Hope we can get you back on the show again. Maybe we'll take it on the road.
Yeah, we'll head out there.
And get down there. Play
The
some
Royal
golf,
Palms
Camelback.
Hotel. Yeah, it's nice out there.
It's fantastic. Jack Selby, Managing Director at Teal Capital, talking to us also about ACVC, which is the $115 million fund that kicked off last August in the heart there of Arizona. And looking forward to seeing what they can come up with because it is an incredible region of the United States and a great place to visit and probably to live as well if you're down with the dry heat. For Paul Sweeney, I'm Matt Miller. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pelletier. Elon Musk has told staff at Tesla that he must personally approve all new hires. This according to the information, citing a memo viewed by the outlet. Musk told executives to send him a list of hiring requests on a weekly basis. Shares of Tesla lower today by just about 1%. Emmanuel Macron made his pitch that France is a leading hub for foreign investments and electric cars directly to Musk as the president seeks to attract global businesses. Macron and Musk, the head of Tesla and the world's second richest person, discussed prospects for development in the electric vehicle and energy sectors today at the presidential palace. Sarepta Therapeutics surged the most since late 2019 after U.S. regulatory advisors recommended approval for the company's gene therapy for a severe inherited muscular disease. Sarepta shares up today by 30.8%. ONEOK has agreed to buy Magellan Midstream Partners in an $18.8 billion cash and stock transaction that would create one of the largest American oil and natural gas pipeline operators. ONEOK shares dropped 9.1% on that news today. We saw shares of Magellan Midstream Partners up by about 13%. An update on Wall Street, the Dow, the S&P, NASDAQ, all advancing today with the S&P up by 0.3%. And those are some of the company stories we're following at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, it's Paul Sweeney and Matt Miller, the B team, sitting in for the A team of
The
Carol.
JV.
The JV squad. We are here looking at these markets here. Really didn't do much today. Not much volatility, not much volume, but that's okay. We've got, I'm sure the good folks down in Washington, D.C. will take care of us when they meet together with the president and stuff. But right now, let's go down to D.C. Nancy Lyons, she's got the world and national news.
Sure thing, Paul. Special Counsel John Durham is finished his Russia probe after 4 years. In his report, he found fault with the FBI and the Justice Department's probe into whether Donald Trump's campaign conspired with Russia to interfere in the 2016 election, but he failed to issue any new charges or to recommend significant changes to investigative procedures. President Biden will be sitting down with congressional leaders tomorrow to resume talks about the debt limit. Today, Treasury Secretary Janet Yellen reiterated her warning that the U.S. will run out of cash as soon as June 1st unless Congress raises or suspends the debt ceiling. A Virginia man is in custody after entering the field office of U.S. Congressman Jerry Connolly with a metal baseball bat and injuring 2 staffers. Both of them were taken to the hospital with non-life-threatening injuries. Sergeant Lisa Gardner is with Fairfax County Police.
It's quite frankly scary that someone can just walk up to an office holding a baseball bat and just start swinging.
Officer Gardner says they're still looking into the motive for that attack. The State Department is out with its annual report evaluating religious freedom around the world. We get more from Bloomberg's Irv Chapman.
Secretary of State Antony Blinken noted that some countries have taken steps to combat discrimination on the basis of religion, while others are doing the reverse.
Governments in many parts of the world continue to target religious minorities using a host of methods: torture, beatings, unlawful surveillance, and so-called re-education camps. Governments use apostasy laws to justify harassment against those who don't follow their particular interpretation of a theology.
Blinken cited the persecution of the Catholic Church in Nicaragua, the harassment of young women in Iran, as well as rising anti-Semitism and Islamophobia. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
All right, Nancy, thank you so much. We appreciate it. All right, so any of you that have listened to Matt and me on the radio know that we like to talk cars. Matt really likes to talk cars, but one company that we just never talk about, and it's not even in my consciousness anymore, is Stellantis. Now, they're in the news, probably not for the reason they want to be, because a union representing auto workers said a plan by Stellantis to build a new battery plant in Canada is growing more precarious as negotiations between the company and Prime Minister Justin Trudeau's government drag on. How important is Canada to some of these North American automakers? Like, does GM and Ford?
It's huge.
It is?
Yeah, for
is
sure.
Is it just lower cost
Consider
of labor?
how close Canada is to Detroit, right? You can, I can see it from my window.
Right, Ontario, right?
So
or wherever it is.
A lot of these car makers have production facilities in Canada, and Stellantis specifically, which of course is the name of the giant conglomerate that owns Fiat Chrysler, which is, of course, the international company that owns Chrysler and, by extension, Dodge and Ram. They produce probably the most American car made today in Canada, right? The Dodge Challenger is a rear-wheel drive, front-engine, V8-driven muscle car. It weighs about 6 tons, and has a huge carbon footprint.
So who would ever buy one of those
14 miles per gallon. That's made in Brampton, Canada. Of course, what Dodge wants to do is a real pivot away from these big, gas-destroying fossil fuel fountains to a battery-powered future. And Canada is one place they want to do it. It doesn't look like it's going to be 100% done deal in terms of making those